This video will help married folks decide if they should file their tax return as joint or if they should file their tax return as separate. If you don't know who I am, my name is Chris Dime. I'm a financial planner out of Edmonds, Washington, and I specialize in working with folks to and through retirement. Now, the IRS has a number of different tax filing statuses available for those who are going to submit a tax return. And the biggest determining factor as to which classification you fall into is whether or not you are married. Now, for those of you who are married, that leaves the decision to do married filing jointly or married filing separately. And while the conventional wisdom is to do married filing jointly, there are some nuanced reasons to choose married filing separately, and so in today's video, we'll break down some of those nuances and then back everything up with some math. So let's jump in. Now, 9 times out of 10, if the goal is to pay as little in tax as possible, the married couple will be best off by doing married filing jointly. But there are some reasons to do married filing separately, and to set the stage for any of that nuance, let's first back up and walk through how income taxes are calculated, and then do some very quick hypotheticals to better illustrate this point. For the sake of simplicity, let's use the newly updated 2025 federal income tax brackets as a proxy for the total amount in tax that you would owe if you chose married filing jointly or married filing separately. Now, of course, there's nuances with tax credits and deductions, and there's further nuances if you live in a state that has some state-specific rules. We'll touch on both of those nuances later on in the video. And for the very simple answer as to which one's best for you, you might as well just run both calculations. It really shouldn't take you that much time. As a quick refresher on how federal income taxes are calculated, they are done so on what's called a marginal basis. What that means is if you hear someone say, oh, I'm in the 22% tax bracket, that doesn't mean all of their earned income this year will be taxed at 22%. What it's referring to is the particular tax bracket or bracket of income that they have earned up to. Various brackets of income are taxed at various rates, and those various rates applied to various brackets amalgamate to your total tax owed. Let's look at the 2025 tax rates for a married couple who are choosing to file jointly. How you would read this chart is any income earned between $0 and $23,850 is going to be taxed at 10%. Any income earned between 23 grand and 96 grand roughly is going to be taxed at 12%. Any income between 96 grand and 206 grand is going to be taxed at 22%, so on and so on, different brackets. On the other hand, if we look at the married filing separately tax brackets, you would read them the exact same way, but as you can see, those brackets are a little bit different. And this applies to single taxpayers, head of households, etc. The income brackets are different with various rates applied to those various brackets. Once you add up how much tax is owed for each particular bracket, you then add up all those taxes together, and that's your total taxes. To help us decide whether we should do married filing jointly or married filing separately, let's walk through a quick hypothetical example with a couple that's earning $500,000. If they do married filing jointly, then the total tax they will owe is about $114,000. Now, that's not the actual number they'll owe to the IRS because there's also the standard deduction that would apply to their income for the purposes of the previous calculation. But just for scenario purposes, if they earn 500 grand, they'll owe around 114 grand in taxes. On the other hand, if we assume a couple earning 500 grand is because both spouses earn 250 grand each, then their total tax adds up to $57,063, which coincidentally, if you double, because there's two spouses, it equals the exact same number as the total tax owed for a couple making 500 grand doing married filing jointly. So what can we take away from that? Well, we can conclude simply that if both spouses are earning about the exact same amount of income, then it doesn't really matter from a federal income tax bracket standpoint whether they do married filing separately or married filing jointly. But more realistically, what about situations where spouses earn a disproportionate amount of income? Where let's say one spouse earns a lot of income and the other spouse earns very little income or no income at all. Think of like a stay-at-home spouse, for example, with very young kids. One spouse might earn 500 grand, where the stay-at-home spouse might earn absolutely nothing from a tax standpoint. Well, we don't need to do a bunch of robust math to figure out that mathematically, it's in the best interest of the spouse earning nothing to do married filing separately because their tax liability would be $0. Whereas if a $500,000 earner did married filing separately, their total tax bill is about $147,000. And 147 grand is about 30 grand more than if that couple did married filing jointly of the total taxes they would owe. So we can conclude from this that the spouse that's earning a lot of money will benefit from doing married filing jointly, whereas the spouse who's not earning as much money would benefit from doing married filing separately. Whereas if the couple views all of their income, even if it's earned disproportionately, as a couple who collectively is paying taxes, then collectively it's in the best interest of that family to do married filing jointly, because collectively their tax bill will be less than if they did married filing separately and then added them up. Now, you might be thinking, well, if it's a couple and they're married, why wouldn't they just view things as a collective? Why is this even a question at all? Marriage is for viewing things collectively, and thus every taxpayer who is married should file collectively as married filing jointly. And while I understand the sentiment, there actually are some nuanced reasons as to why you might find value in filing as married filing separately, even if philosophically you view everything as a collective. And most of that reasoning comes down to nuances in the tax code where lower earning folks benefit from certain tax benefits and opportunities than higher income earning folks would not benefit from. The most popular one nowadays is income-based student loan repayment plans. Obviously, if you are a family earning 500 grand, then you're probably not going to benefit from as much lax student loan repayment amortizations. Whereas if you're a couple making 500 grand, but you do married filing separately, if you're the spouse that's earning nothing, well, on paper, it looks like you have no income. And if that's the case, then you're probably going to benefit from much more favorable student loan repayment structures than if you are a spouse earning nothing, who on paper looks like they make about 250 grand. In addition, there's a number of other tax credits and opportunities that apply only to lower income earning folks. And so a lot of times with nuances like that, the math can actually make more sense to do married filing separately rather than married filing jointly based on some of those nuances. One thing I've harped on in previous videos is income-related monthly adjustment amount as it pertains to whether or not you pay more for parts of your Medicare than other folks do. And simply put, if one spouse is on Medicare, but they are the spouse that earns relatively nothing, and disproportionately, the spouse earning a lot of income isn't pulling Medicare, well, in those cases, it could make sense to do married filing separately. And that's because the spouse that's pulling Medicare right now, if on paper they show that they're earning next to no income, well, then they'll have no income-related monthly adjustment amount, meaning that their Medicare won't be more expensive than regular Medicare if you Google the cost. Whereas if they're a spouse that earns nothing, but on paper it looks like they earn a lot of money, they are probably going to get hit with what are called IRMAA surcharges, or income-related monthly adjustment amount, additional charges on their Medicare, and they're probably going to pay more for Medicare solely based on the income from their spouse. So in those circumstances, it could make a lot of sense to do married filing separately. And you might also be thinking, okay, well, what about Social Security? I've heard of things like provisional income, and I'll link above here as to what provisional income is in a little bit more detail. But simply put, it's where you add up all of your income, and based on your total amount of income, including half of your Social Security paycheck, that tells the IRS how much of your Social Security income in retirement you need to pull back into taxable income for the purposes of including it and thus paying income taxes on that income. Unlike IRMAA, if you do married filing separately and you try to game the system where the spouse pulling Social Security shows no income on their married filing separate return, unfortunately, Social Security Administration is wise to this and basically says if you lived with that other spouse for any part of the tax year, well, then you are basically just considered married filing jointly for the purposes of factoring in their income into your provisional income, or sometimes called combined income. Certain states might have other reasons to bias one towards doing married filing separately. I'm not an expert in state tax returns, but I have heard things like California with their mental health tax applied to those folks earning over $1 million. The math could make sense that maybe only one spouse gets hit with that, or if you do married filing separately, then neither spouse gets hit with that California tax. I'm unsure on the specifics on all those things, but it'd be a good idea to check with your specific state. But of course, there are downsides to married filing separately. And other than the fact that you might collectively pay more in tax if you do married filing separately than married filing jointly, there's also things like Roth IRA phase-out limits. If you're married filing separately, your Roth IRA phase-out limit is 10 grand, meaning if you as the married filing separate spouse, which both spouses would be in this case, earn more than $10,000, which probably at least one of the spouses would, then that spouse, whoever earns more than 10 grand, is ineligible to even fund a Roth IRA. And that's miles above the income thresholds for married filing jointly couples, around like 200-something thousand. Now, of course, there's workarounds like backdoor Roth IRAs, and I'll link to an explainer video of how those work. But ultimately, there are some downsides other than just probably paying more in taxes than doing married filing separately. Now, of course, there's another demographic of folks out there who are married but would prefer to file separately, even if it means more in taxes. And while the easiest one to think about off the top of my head are folks going through a divorce who might, at this point in their relationship, prefer just to keep things separate as much as possible. There's also couples that choose to keep all their finances separate from one another, even if they're in a happy marriage. That's just how they rock and roll. Oftentimes, married filing separately can make the most sense to maintain that privacy. In addition, let's say if maybe one spouse runs a business or has had a rather, shall we say, checkered past in filing taxes accurately, the other spouse might not want to become liable for what that particular spouse is reporting on their tax return. And by married filing separately, you very much reduce, if not fully eliminate, the tax liability for the, shall we say, scrupulous taxpayer on your tax return if you do married filing separately. There's a bit of separation of liability there because you're assumed not to know what they're reporting at all. So in conclusion, for married folks, generally 9 times out of 10, if you view tax paying as a collective effort, married filing jointly will make the most sense. However, there are of course nuances as to when married filing separately would be more advantageous, and a lot of those comes down to nuances in the tax code. But of course, there are married folks where for one reason or another, they would just prefer to maintain a little bit of financial separation on their tax return. And for those folks, married filing separately could be the way to go. Either way, from a calls to action standpoint, with technology where it's at today, it should be super simple just to run both scenarios every single year. Now, with regard to income-related monthly adjustment amount, that's going to be looking back 2 years. So this is probably more of a proactive thought process to do as it pertains to your filing status. But for all the other benefits we're talking about, 9 times out of 10, they can be done on an ad hoc year-by-year basis. And so you might as well just have your tax software or your tax professional, who probably also uses a software of some kind, just run both scenarios. It really shouldn't take too much time. And who knows, you might be surprised at which opportunity saves you the most in taxes. So hopefully that was helpful as we walk into the tax paying season in a couple of months. If you have further questions, drop them in the comments below or get in touch with the website. We'll help you get squared away. Have an awesome rest of your day. We'll talk to you later. Bye.